What's up, guys? Stas here. So in this video, we're going to be doing a quick M1 Finance portfolio update, going over one of my long-term accounts here that I actually started almost a year ago. It's almost the 1-year anniversary of this account here. And for those of you guys that don't know, maybe you're new to the channel, I started this about a year ago for the YouTube channel to show you guys how I build a long-term portfolio with the goal of holding the stocks and ETFs in the account for at least 5 to 10 years, right? And sure, sometimes if fundamentals change, we do cut positions, and I go over that in this series, and you guys can actually check all the previous episodes out, linked down below in the description box if you want to see how the portfolio has gotten to where it is today. But yeah, we pretty much just document everything on these videos, on this playlist, and again, with the goal of showing the viewer how to build a long-term account, or not necessarily how to build it because I'm not a financial advisor, but just going over how I personally build my account. So if you guys find value in the videos, as always, hit that like button, consider subscribing to the channel, and again, check out the playlist down below. It's called M1 Finance Investing Series Playlist. That is where you'll find all of the previous videos. So let's just get right into it, guys. Right now, the portfolio is $4,000, $4,072.01 to be exact. And another thing worth mentioning, and I'm sure many of you guys already know this portfolio is mostly geared to dividends. Sure, I do have some growth names in here, as you guys can see, MasterCard, Amazon, although MasterCard does pay a dividend, I believe it's under 1%, so they are technically a dividend play, more of a dividend growth play, but I do have some stocks in here that don't have a dividend, such as Amazon. Disney actually suspended one of their dividend payments because of the whole situation we're in now, so I guess you can say Disney's not paying a dividend, although they'll resume paying it once the whole situation surpasses, right? PayPal does not pay a dividend. Facebook doesn't pay a dividend. And pretty much those are it, right? Other than those, all of these stocks in this portfolio pay dividends, and they're all blue chip stocks, right? They're all solid paying companies or just solid performing companies over time that have a very long track record. So overall, guys, at this point, we know that the stock market is at all-time highs. The S&P 500 is not quite at all-time highs, but we've seen a rebound of 30 to 40% from the lows, and the NASDAQ itself is actually at all-time highs. It actually surpassed $10,000, which is absolutely insane. And this is very good news, but the economy is still struggling, right? We're seeing Apple is now closing more stores in different states such as South Carolina, North Carolina, Florida, and Arizona, as cases of the CV are spiking in different states such as Florida and Texas. So America could go into a second wave of pain here, especially if we see closures across different states, which in turn will shut down businesses and likely cause, well, it definitely will cause more economic pain and likely a second drop in the stock market. So in this case, guys, in the situation that we're in right now, again, with the markets being very high, I'm actually being very cautious. I'm still putting money into this portfolio, but not as heavy as I will in the next drop. And I don't know how much this drop is going to be, whether it's 10, 20% in the stock market, that is, or another 30% drop. But all I'm saying is I'm ready for this drop, and I'm going to go in heavier. As you guys can see here, I've just been putting in $50 every week pretty much, throughout the month of June, again, since the markets are so high. But I have been playing offense. Like I've been saying on the channel, I play offense while playing defense, and defense is you're stacking up cash, getting ready, and having that ammo, that dry powder ready to go. And I don't actually have cash in this portfolio because I keep it in a high-yield savings account, but again, I'm ready to deploy it on the next drop. So at this point, I've deposited about $200 into this portfolio in June, and I will probably put another $300-400 in here just to play offense again and to dollar cost average into the markets. Because another thing worth noting, guys, is this is, again, a 5-10 year portfolio, so it's not really going to make too much of a difference, if I'm buying J&J, for example, here or at $130 over the next couple of years, as long as I'm dollar cost averaging. But to kind of get a better return than the markets, not that we're always going to beat the markets, but to try and do better than the markets, I'm going to wait for a bigger drop. And a lot of people might say, Stas, you're stupid, dollar cost average, but that's how I'm looking at it, right? That's how I'm doing it right now, and that's just me being completely honest. I'm still buying in, but if we see a bigger drop, that's where I'm going to go even heavier, so my return in the long term is better, right? So you guys can see my slices here, and the beautiful thing about M1 Finance, guys, and another thing to note, M1 Finance is not a trading brokerage. This is simply for long-term investing, and the reason is they have trading windows, meaning you can only place trades between 10 a.m. and 3 p.m. or in these two blocks at 10 a.m. and 3 p.m. So this is not for the traders, again, because traders, they want to get in at pinpoint prices. You don't get pinpoint prices with M1 Finance because it's in a window. But for me, going back to kind of what I said before, if you're dollar cost averaging over the long term, it kind of doesn't matter exactly where you buy the stocks at those certain prices, because again, it's smoothed out over time if you're dollar cost averaging, right? So that's pretty neat for M1 Finance, the way it has the slices here, and how it's broken down and easy to see. And you can see here over the long term, or over the all time for my portfolio, I've actually gained about $50 in dividends. We're down overall in the portfolio, down about 5% money-weighted average return. But you guys can see ever since the market bottomed out and rallied pretty much over the past quarter here, this is up about 25%, up $700. And you can see how some of my holdings here have been doing. SPHD, DGRO, these are my top two ETFs here, both about 10% of the portfolio. One is a low volatility, high dividend yield ETF, which is SPHD, and the other one is DGRO, which is a dividend growth ETF. To give you guys some perspective, this ETF, its top holdings are companies such as Apple, Microsoft, right? Companies that they don't pay dividends now. Well, they do, but not a lot of dividends, but they are growing the dividends, so in the next couple of years, it's going to be a lot higher than it is right now, if that makes any sense, right? So those are my top two. I have kind of a base there, 20% of my portfolio in a nice batch of ETFs. And then you guys can see my next holding here is Realty Income. This is actually a real estate play, and I'm not looking to buy more of it now. I feel like I've built the position out a bit to what I want it to be for now. But if we do get a second pull down here in the markets, I'll probably add more into this one. Then you can see Johnson & Johnson, Microsoft, MasterCard, followed by Amazon, Altria. Altria is a very nice high dividend play. Its dividend right now is about 9%, actually about 8%. So when we're looking at stocks that I'm looking to buy in this market right now, again, being at all-time highs, I'm actually looking more at yield. I'm looking more at companies that have a nice cash flow. Due to the market's at all-time highs, we're seeing interest rates close to zero, so the bank accounts, savings accounts, they don't really have any yield whatsoever, 1% if you're lucky. So I'm looking to put money in a high dividend stock here to give me that return on my capital, that nice cash flow over the next couple of years, right? So Altria is definitely one of those. Johnson & Johnson's another one, stable healthcare company. I love them for cash flow and just for a defensive investment, right? And Duke Energy. If you guys are into utilities, I love Duke for utilities. This is one I'm also looking to buy, although it is a bit lofty now in valuation. Maybe we'll see if it does take a dip. I'll end up adding more into that one. McDonald's, 3M. These are two other dividend stocks I'm looking to potentially average into here over the next couple of weeks that I'm looking to buy, right? And one of my favorite ones right now, guys, is actually AbbVie. They have a dividend growth rate, last time I checked, about 20%, meaning the past 5 years, the compounded annual growth rate has been 20% for the dividend, which is absolutely incredible. They're growing it at lightning fast speed, with the dividend yield being around 5%, and they have a lot going for the company over the next couple of years as Humira's patent got pushed back to 2023. And if you guys don't know, Humira is their top drug, so this is very good for their business. So yeah, through 2023, I see the stock going, honestly, above $100, $120, with that dividend continuing to grow. This is a play that I love right now, a stock that I love right now that I'm looking to hold for a long time, at least 5 to 10 years here, guys, plus, right? And you guys can see I have AT&T here, another nice dividend stock, Procter & Gamble, and Pepsi. So you guys can notice I don't have any crazy speculative growth stocks in this portfolio. This is more of a stable blue chip portfolio that is consistent, that provides cash flow, and quite honestly, none of these stocks here are at risk of bankruptcy, right? This is a very safe long-term portfolio. And as of now, you guys can see I have about $12 in cash that I'm actually buying a little bit of AT&T and Pepsi. And another great thing about this platform is you can buy increments, right? You can buy fractional shares. As long as you're buying over $1 of stocks, ETFs, whatever, you can place the order, right? So again, just $12. I'm just spreading it across AT&T and Pepsi, as you guys can see here, $6.59 in AT&T and about $6 in Pepsi. So the stocks I'm looking to buy are those, pretty much Pepsi, AT&T, McDonald's. I like these types of stocks in this environment. Maybe not so much McDonald's, maybe more AbbVie over McDonald's and Altria over McDonald's. But that's just me being completely honest here, guys, showing you all into one of my long-term portfolios here. And going back to activity, the dividends aren't that crazy, but we're still churning out dividends here. I think this month, this portfolio's made about $10 to $15 in dividends. And the whole idea here is I'm reinvesting them for the long term. No money is going to come out of this portfolio, only money going into it, right? And overall, that's pretty much it for this update, guys. Kind of what's been going on in my portfolio so far in June. And if you guys actually like this M1 Finance platform, I'm not just some salesman here making a portfolio just to make you guys sign up. This is genuinely a platform that I love, and you can tell through these videos. Again, I've been on this platform for about a year now, and I've had really no issues. The only thing I would love for it to change, guys, if I'm giving some constructive criticism here, is to get rid of these trading windows. And I believe that they might do that over the next couple of years as they continue expanding and growing. That might be a feature that they change. And mind you, this is a newer brokerage, guys. So as they get more resources, more capital, they might be able to change this, and that would be fantastic. But other than that, I really have no negatives to say about this brokerage. I absolutely love it. And if you guys want to actually get $10 to sign up for it, all you have to do is use that link down below. We both get $10, and when you deposit money into the account, that's when you get the $10. And it's a great, again, long-term portfolio and kind of a way to just put money in an account and just forget about it, because you can also auto-invest, which I have off because I want to be more hands-on, but that's always an option for those of you guys that just want to throw it in, throw your money in here, and have M1 divvy up the money based on how much you cut your slices here when it comes to your overall portfolio pies. So again, that link's down below in the description box. I'll catch you all in the next video. Let me know down below in the comments your thoughts on this portfolio and your thoughts on the markets in general. Peace out, guys. Stay safe out there.